Welcome to the Daily Business and Finance Show. Investment shifts and market tumbles, Berkshire Hathaway's big exit, ZIM's Q3 slide, and Cisco's revenue rethink. Legal battles and environmental controversies, PepsiCo in hot water with New York State. Tech innovations and rising shares, Microsoft ignites interest with AI chips. Forecast fumbles and stock surprises, Palo Alto Network's unexpected cut, UBS's high-conviction stocks list, Exxon CEO on the path to net zero. Stay tuned after this short ad break as we delve deeper into these headlines. Warren Buffett's company, Berkshire Hathaway, has parted ways with its stakes in General Motors and Activision Blizzard. Additionally, it has let go of smaller holdings in Johnson & Johnson, Mondelez, Procter & Gamble as well as United Parcel Service. The company also lessened its shares in Chevron, HP, and Amazon. Despite these changes, the largest holding of Berkshire Hathaway, which is Apple, remained untouched. Consequently, the value of disclosed investments by Berkshire dropped by 10%, amounting to $312.8 billion.
ZIM Integrated, a cargo shipping firm, saw its shares drop by 10% following Q3 results that fell short of Wall Street's expectations. The company disclosed a net loss of $2.3 billion, primarily attributed to a non-cash impairment loss amounting to $2.6 billion. Consequently, it has adjusted its full-year guidance in a downward direction. CEO Eli Glickman pointed out weak demand and declining freight rates as significant problems. Notably absent was an update on dividends after the underwhelming quarter.
Cisco Systems has experienced a 12% decrease in share value following an adjustment to its sales forecast for the year 2024. The new projection ranges from $53.8 billion to $55 billion, a reduction from the earlier estimate of $57 billion to $58.2 billion. This change is attributed to a deceleration in new orders. Furthermore, Cisco anticipates earnings per share will be lower than initially expected. The company attributes this downturn to customers shifting their focus towards product implementation after several quarters of robust delivery.
PepsiCo is currently under legal scrutiny from the Office of the New York Attorney General. The company stands accused of causing environmental and public harm due to its use of single-use plastic packaging. The state's objective is to put a stop to these detrimental practices and secure penalties for the damage inflicted. Following this news, PepsiCo shares experienced a drop of 0.95%.
Microsoft has recently revealed its inaugural in-house processors, named Maya 100 and Cobalt 100. These are specifically designed for artificial intelligence and cloud computing applications. Azure Cloud customers will have access to these chips, which are currently undergoing testing by Bing, Office AI Products, and OpenAI. In addition to this, Microsoft has launched Copilot Studio for tailoring AI assistant software. They've also announced a price reduction for Microsoft 365 Copilot users down to $50 monthly. Updates have been made to the team's software and a fresh application known as Loop has been introduced.
Shares of Palo Alto Networks experienced a 9% drop in after-hours trading following the company's decision to lower its fiscal year billings forecast. The new projection is set between $10.7 billion and $10.8 billion, a decrease from the prior estimate which reached up to $11 billion. However, it's worth noting that the first quarter revenue and non-GAAP earnings surpassed analyst predictions, coming in at $1.9 billion and $1.38 per share respectively.
UBS has pinpointed 14 stocks, which include Apple, Boeing, and Advanced Micro Devices. These are anticipated to show strong performance in the coming 6 to 24 months. This is attributed to a range of elements such as macroeconomic forces and alterations in policy. On the other hand, UBS has taken off American Express, Bank of America, and Merck & Co. from its roster.
The chief executive officer of ExxonMobil, Darren Woods, contends that vilifying oil and restricting fossil fuels might obstruct the advancement towards net zero emissions. He further suggests it could continue to perpetuate poverty in developing countries. Woods is of the opinion that emphasis should be placed on investing in low-carbon technologies which can work alongside fossil fuels. He advocates for governmental backing for technologies that reduce emissions such as carbon capture and hydrogen, prior to allowing market forces to assume control.
And that's a wrap on the Daily Business and Finance Show. Stay invested, stay informed, and we'll meet you back here tomorrow for more insights. Farewell. I'm Montgomery Jones.
And I'm Amalia Dupre. Farewell until tomorrow. Have a good one wherever you are.
This content is sourced from the Seeking Alpha website, so support our podcast by becoming a Seeking Alpha Premium subscriber. See the show notes page for links to sign up. This episode is produced by Classic Studios. Check out our other podcasts in our network at classicstudios.com.